Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Setup Sunday, let's take a look at some charts. Once again, not much changing week over week here, but we'll take a look at the key levels that I'll be watching throughout the week. ETF flows continue to come in hot and heavy while price has gone nowhere. So that of course means this is either ARB, MSTR ARB, or basis ARB. And all that means for people who have no idea what I'm talking about there is this is a long that is being paired with a short somewhere, or this is non-ETF sellers selling. Crazy concept, I know, right? But we clearly have plenty of sellers here still to basically absorb and counteract whatever the net buying is minus the ARB. Now, there's a lot of people who are fading this and they don't understand what's going on. Why can't price be higher? Why isn't price higher? Why was price red on the week or whatever? But there will be a time when we start to see price move higher, and then we'll see what flows really look like. There's a world where we may not have seen the largest net inflow for the week, which was, I believe, 2.5 billion on the week, something like that. Yeah, 2.565. I mean, we could see 4. I don't know, right? It could get crazy once this thing gets cranking post-election. But for the moment, the inflows have helped us keep afloat quietly above some key technicals, which we'll take a look at. And I think most importantly is this. The monthly GBTC outflows have finally gone to zero. We're actually positive on the month in October. Now, why would people buy GBTC at all? This is either A, people who are very ill-informed about the discount, or B, ARB, right? It's ARB traders. It's people looking for liquidity, for volume, for people who don't care about the fee, for people who are fee agnostic. These are the people who would buy this. You're either fee agnostic because you know better or you don't, right? But that's why you would buy this. There's really no other reason why you would buy GBTC over even Grayscale's BTC product. But the monthly flows also look great for October. And as a reminder, for the past few cycles, we typically do best post-election, post-halving, regardless of who wins. Now, some people may say, if Harris wins, it's a bit of an existential crisis for crypto, which is certainly a possibility. And I think it's why a lot of people are kind of just waiting to see what happens. We've seen price curl up along with the election odds, but it's certainly not all said and done yet. Not until probably Saturday after election day. We probably, think about this, we probably have an FOMC meeting on the 7th without knowing who the president is. That's very possible. So there's all sorts of uncertainty early on in November that could delay this move even more because people just aren't sure. Now, there's also a world where it doesn't matter and it hasn't mattered and it won't matter. I'm not quite in that camp yet, but that's what the data says. The data says it doesn't matter. Harris, Trump, it doesn't matter. Certainly not for the long term, but I'd imagine in the short term, it's going to matter. And I think that's what a lot of people are waiting on. If we look at price relative to halving, this is weeks plus and minus relative to halving. We are certainly in the wheelhouse of expectations here post-halving for a move to happen. It's not like we're early now. We are well on time. The party at this point has already gotten started in 2020, and it's certainly already gotten started in 2012. And we're closer to resembling the 2016 cycle at this point than any of the other cycles. But we've burned off this euphoria. The early ETF euphoria in many ways is gone. In Google Trends, in the 200-day moving average, in the 200-week moving average, general sentiment just isn't what it was in January, February. And that's pretty obvious. And of course, there's a world where none of this matters. We go to zero. That's obviously always an option. We'll call that the null hypothesis. The null hypothesis is nothing matters. We go sideways. We float down, right? But this is a probability game. Are you looking at this relative to previous cycles and saying, yeah, well, this isn't going to matter this time? Or are you trading around that and saying, okay, if it's anything like the previous cycles, then it might be worthwhile to pay attention, right? That's one way to think about it. And certainly it's that way with seasonality. Do I love the idea of seasonality? No. A lot of people fade this. A lot of people think seasonality is total nonsense, just like they think TA is total nonsense. That's fine. It doesn't matter. It's the data. The data is the data. It doesn't have feelings or emotions. And what does it tell you in Q4 historically? One of the best quarters for BTC. We're positive on the quarter, but we're on the lower end of positivity, right? You can see how crazy this could get, how crazy this has gotten in Q4. Look at the median, look at the average. Both cases are very strong for Q4, potentially yet to come. And then on a monthly basis, positive for October here still. We've got November and December to look forward to. Ideally, right? Again, this isn't, we're just pattern matching here. We're just looking at when was this bullish, why was it bullish, relative to elections, relative to halving. We're in a similar place here where things of a bullish nature could happen. Now, we've actually been above the daily cloud for a considerable amount of time here since September. Now, it doesn't feel like it because we've kind of gone nowhere. But if this is my favorite and best litmus test for bullishness, price remains on the bullish half of the cloud, the bullish territory based on the cloud, where good things tend to happen if you're bullish. I don't think it makes much sense to get bearish here until price is below the cloud. Now, you could say, well, I think Harris is going to get elected. I think that's bearish. Or I think Trump's going to get elected. I think that's bearish. That's all fine. But the technicals continue to suggest we're in the bullish territory path. Never a guarantee, never a promise. But good things happen above the daily cloud. Even the 3-day. If we zoom out, this is basically the 6-day singled settings, default settings, which is roughly kind of the weekly. But in any event, it's still holding above the cloud, bullish TK cross. The big question mark is obviously the election. But if I was just trading this on an island, relying solely on technicals, there's no reason not to be long here and never look back until we're below the cloud. On the daily, on the 3-day, whatever metric you want to look at, it's very hard to ignore how bullish this is based on trend, even though it doesn't feel like it. And then on top of that, we can add things like this, which is the 2-year moving average multiplier. We can say, okay, what's the theoretical risk reward on the upside here? 2-year moving average is around 42K. So that would effectively act as the stop loss in this hypothetical scenario. And the target is essentially 200 here today. Now that's going to continue moving up if price moves up. Much like 2017, the longer this takes to get to the ceiling, the higher the ceiling gets adjusted. But the risk reward here is certainly favorable towards price appreciation. Still, unlike the power law, this is a little bit more dynamic, but I like both. I like the power law, I like this. And it gives us plenty of room to run, potentially. We also have a bullish 5200 cross. We've held above the 200-day moving average for less time than we've held above the cloud, but we're still holding above it. There's no denying that. In the last bull crosses we've had, everybody always says, the bear cross is late, the bull cross is late. Fine, right? We did exactly what we did in Q4 last year. Bearish cross, check back on the 50-day, cross above the 200, bull cross on the 5200. Again, the only thing that's holding me back is the election. Looking at the pitchfork, it also gives us a potential just zone of probability where we're overbought or oversold and where the trend is basically over, which would be sub 50, essentially. Peaking down here in the white is the 200 week, which is also around 40. So let's say the market gets really angry for whatever reason. Black swan, right? Black swan, 40 is the level. Black swan, the 200 week is always the level. Otherwise, we're leaning bullish here. The 20 week in the green here, we've also been above that for quite some time. We're above the midline of the pitchfork. We're above the diagonal resistance line of the past 6 months, depending on how you want to draw this. It's tough. It's not a straight line. It's not a horizontal. So the market's going to be confused. Everyone's going to be confused. Okay, right? Is this bullish territory? Is this breakout territory? That's why I like to use a few things, not just one thing, but not too many things. It's hard for me to look at this and think, yeah, this is bearish. We've talked about the complex inverted head and shoulders possibility as well. All that is fair game. So on a move higher, I like the early pivot at 80.7, and I like the top of this pitchfork, which is basically between 80 and 100. If we go to 100 tomorrow, the pitchfork would say that's very overbought. If we go to 100 closer to the beginning of the year, then it's certainly more reasonable, but still overbought based on the tolerance of the trend channel. Nothing says we can't keep going from there. Nothing says we can't break this to the top side. But that's really a believe it when you see it sort of situation. The last time we were above this pitchfork, we had a combination of super aggro rising wedge that broke down. That eventually led to an obvious head and shoulders that broke down. So if we get any combination of angry chart patterns, divergences up here, then sure, right? Sell it off, maybe back to the midpoint, maybe not. But the longer we extend to this, the higher we potentially go in the end. If we go to 250 tomorrow, it's basically over, right? That's it. It's the same argument with altcoins. People want 1000x, 1000x, 1000x. That's not how this happens. Typically, it's you get your 500% move and you say, thank you, Mr. Market. I'll be back when it makes sense. But you don't get these back-to-back rolling moves. That's just not how this works. Looking at Bollinger Bands, 71 would basically be the confirmation, as in a weekly close above 71. So it's not going to happen this week. It might happen next week. It might not. It might not happen until the election week. It might not happen until after the election week. I don't know. But because the Bollinger Bands are tightening above the 20-week moving average, that's a very bullish sign for a bullish breakout. You know, what's going to be funny haha, is despite me being as bullish as I am, and we just don't go anywhere. We just break down, right? Even looking back on this with hindsight from today forward, this is me talking to my future self. I don't see any technicals that would suggest we would break down, right? It would have to be event driven. It would have to be essentially regulatory driven, most likely. But B bands look very bullish there. And if we look at historically, when we've had Bollinger Band squeezes of this magnitude, very rare. Most of the time, these have actually led to bullish continuation, except 2018. 2018, we were cruising below the midline for basically the entire year, and then we broke down even further, right? So that is not the case here. Similar in 2022 into 2023, that was when FTX blew up. We were cruising below the midline that entire time. But it's not the case here. So the bias is bullish still, right? We're above moving averages we need to be above. That's the end of that story. There's nothing much else to say. Looking at how you might play this on a breakout, this is like the textbook situation that happened in January. We talked about this on this channel as it was happening. I traded this as it was happening. What's going to be tough here, again, is the lack of conviction on the breakout, where besides all-time high is the actual breakout. If we rewind the clock to February this year, there was a pretty obvious horizontal level with a chart pattern, with a daily TK bull cross. We don't exactly have that here. It's not as clean as this. Even still, a similar path is what we want to see. We want to see a breakout with Williams Fractal trailing stop losses, keeping you in the trade. This was 38 days. It was a 53% gain. That's including the trailing stop loss. That isn't from nose to tail, peak to trough. That's from breakout, the trailing stop loss. And you can see just how long it took for the first Williams Fractal to even appear on the daily, and how few fractals we got on the way up, and how patient you really had to be. You know, it's 30 days, but it's a different type of complacency when you're in a range versus this. You know, this is exciting. This is, okay, what do I do? What do I do? What do I do? Whereas in reality, you just let your runners run and you use some sort of trailing stop loss. Along with the Williams Fractal, we were also very far away from the TK lines on the daily. You can see price was way up here. Now, to hug the Tenkan is tolerable generally for most markets, as we did in 2023 into 2024. But to have an extreme slingshot like this, well above the TK lines, is difficult for the market to hold on to over a long period of time. Along with funding, along with OI, there's other stuff outside of price that you can watch. But looking at the technicals, trailing stop losses, Williams Fractal are the strongest system that I know of. That is just like stupid simple. Okay, here it is today. You can see we're not too far from the TK lines. TK line's flat. That just says we're momentumless here. Stop loss on any active longs would be at 65.01 on a daily, and it wants you to add on higher highs, which is 68.9. You can also see when we're ranging, when there is not a trend, that is not the time that you should probably use trailing stop loss Williams Fractals most of the time. You know, this was nothing. So the cloud with the trailing stop loss is what you want. You want an active trend, which I'm going to argue, and I think most people would argue, we haven't really seen yet. Now we of course have, along with everything else, just over the past year, let's say year to date, you know, we've been in this range. We of course have this cup and handle possibility, which is attracting some legacy folks who are aware of it, because just like gold, the expectation here is bullish continuation. The difference between gold and Bitcoin is it took gold a decade for this to eventually play out. And I would also argue the handle for gold was much more convincing in a bullish continuation fashion. Now, the inverted head and shoulders police are going to yell at you and say, you can't have an inverted head and shoulders at the top of a trend. And this is obviously an example where it can and does happen and played out as expected. But it's not like everybody's bullish and everybody just sees this and everybody just wants this to go up. I mean, this is a known pattern. Okay, just add this to the pile of things where there's already a baked in bullish bias and the market has seen it and is aware of it because it's just happened on gold after a decade of consolidation. There aren't many other alts where things are happening. Solana is one such alt where things are happening from both a technical perspective and an on-chain perspective. The user activity for Solana has picked up in a big way. It has outpaced most other chains here by every metric you can think of. Now, inevitably, somebody in the comments is going to say, well, what about blah, blah, blah? Okay, fine. But pound for pound, Solana, in my eyes, is doing the best out of the non-BTC chains here. And it also makes sense that price is curling up. It is also trying to escape the range here that it's been in since March. All alts want BTC to be bullish first. Solana is leading pretty much everything else. I'm not going to count Sui. I'm not going to count Tau because it's my show and I can say that. But we have a bullish golden cross here coming up for Sol. You had the inverted head and shoulders that's playing out. You have the diagonal resistance, horizontal resistance, right? You can play tic-tac-toe with this and just draw all sorts of things. It's going to be most convincing above 190, above 200. Then you'll have people talking about 280, 330, that sort of thing. But yes, this is distinctively more bullish than just about anything. I tried to see what sort of pitchfork I could put on Sol. Now there's an old pitchfork here. You can probably see it that ran, these were the 3 points. It's since floated out of that. So this might be the next best version that's still active. And again, it's just a trend channel that gives you overbought, oversold conditions based on rate of change. It is curve fitting on purpose. So, if we get in the purple area, again, that's your sell signal. But this gives it plenty of room to run to the top side. For ETH, still below the cloud, still below the 200-day, still consolidating. It looked like this inverted head and shoulders was going to try and attempt, and then that failed. So here we are. There's not much else to say. You can be bullish on this. You can say, again, XYZ reason. I don't care. That's fine, right? We're not talking about that. We're talking about technicals. If you stack this chart up against BTC and Sol, it's pretty clear where this ranks among the three. What you're looking for is what we saw in October last year. Price above cloud, price above the 200-day. You can buy this at any point, and you can be a hero. You can say that's the bottom, and it might be the bottom, but trend metrics are not on your side just yet. Along with that, ETH ETF flows have been basically zero. That's not saying I expect them to be higher, but we haven't seen any legacy FOMO on the ETH side yet. I don't have a doubt that one day we will start to see ETH flows, but this is just sort of this feedback loop of, okay, right, price isn't going anywhere. Nobody wants ETH in the ETF. Nobody wants ETH in the ETF. Price isn't going anywhere. Much like BTC stuck in the range, ETH needs something here. It needs some speculative push to then bring in legacy money for whatever reason, but it's still lagging today, right now, everything else. Into 2025, this might look better. Post-election, this might look better. One other alt that I think looks good here, and I did a quick scan of as many as I could think of. One other alt that's been around for a cycle or two, not an alt that recently got listed or recently got posted outside of DOGE, which I'll talk about in a second, but RUNE looks good here because it is above the 200-day. It is above the cloud. It's got a bullish 5200 cross. It's effectively reconsolidating after a triple bottom breakout. Now, does this look amazing? Meh, it looks okay, but this is the state of the alt market on the USD pairs right now. Most everything is down here. The 377 equivalent for RUNE. It's below the cloud. It's looking sad. Basically, it looks like ETH, right? Most alts just don't look good here on the USD pair. using trend metrics. Before I go any further, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Non-investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PVI, DBA, Kraken. And looking at Kraken or anything, any market, what do I like? I like trend metrics that are bullish. I like price above cloud, price above 200-day. DOGE is also one such chart where it paid its dues. It consolidated for months and now is above breakout level, no matter how you want to draw this. It's done dealing with any head and shoulders allegations. It's pulled back considerably, consolidated, and it looks good, right? Not much else looks like this. Why here, why now, I don't know, but not much else looks like this at the moment. On the legacy side, there are a bajillion, zillion, trillion, million, gorillion earnings this week. MSTR is also Thursday. I'm sure there's more miners on here besides Riot. All the Mag 7 or the rest of the Mag 7, excluding NVDA, are this week. Just a ton of earnings. So there's certainly beats and misses and surprises and all sorts of fun stuff that could trickle into the crypto side of the equation here. But there are a lot of earnings this week. We also have jobs numbers. We've got GDP print. We've got job openings. We've got PCE. We've got unemployment at the end of the week. So there's all sorts of reasons why maybe the market doesn't really do anything or hasn't done anything until it knows these numbers and can digest these numbers. And then obviously the week after this week is the election and FOMC. So if you're wondering why the market looks hesitant here, it's just there's a lot of stuff coming up in the next 2 weeks. Continuing with BTC on the legacy side, this is CME futures, 5200 cross bullish. It's above the 200. It's above the cloud. Not much else to say. It is bullish. It's in bullish territory. Measuring the range higher, you get essentially 100K on futures. Looking at IBIT, very similar picture. Above the cloud, still in the range. Looks fine. Nothing to complain about, nothing to worry about. Doesn't look super exciting, but it is in bullish territory. MSTR, definitely bullish territory on the cloud and the 200-day moving average. It's effectively at the BTC era all-time high. Has plenty of room to run on the pitchfork, depending on earnings, depending on the ATM that may or may not be coming. Who knows what happens with MSTR this week? MSTR is one of those things where some people are paying attention to it, more people are paying attention to it, and then they may not size it appropriately initially. And then by the time they get convicted, they double or triple or quadruple the sizing. They go into options, they go into MSTU or whatever. And then that's it, right? Then they just get bulldozed. So whatever you're doing here, just have a plan and be careful because a lot of very interesting volatility events can happen here. I'm not saying that's bearish, but know what you're doing, right? I wouldn't just throw a bunch of money in this and think it's a free ride. In any event, technicals still point to 400, 500. So it's still a 2x from the current price. Looking at the 2-year moving average of MSTR maybe gives you a different picture, a different story as far as the speed of which we can move higher. This was the last top in 2021. I'm going to say that it was correct. You got some extension above the 2-year moving average multiplier, but it was the top. It was the top. So we're not quite in danger zone yet. And the preference is to take this slow and not go to 500 tomorrow, because then that would probably be it. Looking at what would this be? The 4-year moving average says we're kind of in the danger zone already. Now, I'm not trying to talk people out of an MSTR trade. I'm just looking at different ways to think about this because it's been so bullish. The question is obviously, are we there yet? Are we there yet? Are we there yet? I don't think we're there yet on the daily Williams fractals. I don't think those have triggered at all. So you got plenty of room there. I don't think there's anything to worry about, but it's certainly looking a little stretched relative to the high time frame moving averages. Coin this week. It's one of those things where if you're driving this 10,000 ton tanker ship, it's going to take a second to turn and steer it into the bullish territory again. It was very bullish, went sideways, flipped bearish, and now it's in this process of trying to steer this thing back to bullish territory. It's effectively neutral here. 5200 cross, still bearish. It's above the 200. It's in the cloud. Bullish TK cross. I don't really think there's a trade per se here for me, but I know a lot of people are going to be watching this obviously into earnings. Tesla, man, we talked about this mega inverted head and shoulders possibility the last time we were up here at 250, 260. Now we're at 270 effectively. And I don't really know how to trade this, the best way to trade this at this point. I don't know if this is a great thing to take up pre-election anyway. But yeah, there's technical evidence that this has room to run into 2025, I would imagine. I don't imagine that this gets there in a day, but who knows the way this thing trades randomly up 20% for whatever reason. Looking at the 2-year moving average on Tesla, interestingly enough, it looks super cheap here because it has been flat for so long. It has reset the moving averages. The last time it was up here, it was far above the 2-year moving average. Now all of that has reset, and now we've got a ceiling at like 1,000. I remember looking at this in 2020, in 2019, saying, wow, would you look at that Adam and Eve down there? And we have a similar Adam and Eve, a huge macro Adam and Eve. I wouldn't call myself a Tesla bull, but the technicals look compelling. And NVIDIA is another one where it looks kind of scary up here on the high time frames, on the curve fitted, effectively 4-year moving average multiplier. NVIDIA on lower time frames looks fine, plenty of room to run. Probably 180 would be a good level to watch. And I would watch the Williams fractals here on the daily for NVIDIA. I talked about Google on Twitter. This thing also looks like it's potentially ready to run. Is there some regulatory trade here? Is there a Trump trade here? I don't know. But the technicals look like it wants to move higher. 170 definitely being the line in the sand there. And then lastly on Apple, still holding that ascending triangle. Regardless of any fundamental news, it looks fine here. Again, in a vacuum on a deserted island, if all I had was the daily price, I would say, okay, I know what this is. This is an ascending triangle. It has a bullish bias. There's a bullish expectation here of a breakout higher eventually. And the cloud says there's no problem with this, right? You have a bullish ticket cross all the way back here on the daily, still above the cloud. And if NVIDIA moves higher, if Google moves higher, if Apple moves higher, that's going to move the indices higher as well. So it should be a fun 2 weeks here coming up. Whatever you do, have a plan, trade the plan. Don't get lost in the sauce and FOMOing at stupid times, doing stupid decisions when we should have some pretty tradable opportunities. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.